मार्केट क्या लगता है आज से?
No, so you're right, Vikas. I think a great day to shoot. Markets are up 2.5, 3%. In fact,
Right,
this is the second day they are up.
right,
So yesterday it was up 1%. I think third Feb and fourth Feb will go down in history. This was something which was long due. We're talking about tariffs which had been put
right,
on India. You had baseline tariff of 25% and then punitive tariff of 25%
true,
because we were importing oil from Russia.
right,
For last 3 months, we've been waiting for this thing to go through. The earlier deadline was November, then December, and then it went all over the place.
right.
And then we get this surprise last night. And I think everybody is active, media is active, fund managers are active, and I think the animal spirits are coming back and will come back. So markets from here on,
Mm-hmm.
I think it looks very, very good now.
Okay, okay.
Yes.
But Akhil, if you look at last 18 months, people were losing out their patience, and well, nobody was expecting this. It happened suddenly. But do you think that it is now sustainable? Do you think these FPIs who've been selling equities left, right, center are going to now come back in India?
See, nothing will happen immediately. Let us understand the background to how equities work. Now, essentially, for equities to perform or do good performance, you need two very critical things. One, you need very solid earnings growth, and we need very good valuations. So, you need good growth and good valuations for market to go into a bull market kind of a situation, which was exactly what happened in 2021. The markets were kind of turning around, earnings growth was building up, and the starting point valuations were very, very attractive for investors to come in.
Mm-hmm.
So therefore, any investor who has put money in the last 3 or 5 years is very happy. There is
True,
absolutely
true.
no issue. In 2024 is where, on a backdrop of very high returns,
Mm-hmm.
the valuations became expensive and the earnings growth slowed down, and that has been the principal reason behind India's underperformance. Now, India has given merely a 5% return. Emerging markets as a basket has given a return of 31%.
Mm-hmm.
Korea, which is part of the emerging
Yeah,
market, has given 80%
true,
return.
true.
Brazil has given something like 50% return.
Yeah,
So US has done better than us, China has done better than us, emerging markets have done better than us. So India has been the worst performing market, right? And
during the
essentially
last calendar year.
during the last calendar year, Jan to December
Mm-hmm.
25, right? So all the bad news, what you can say, which is not in favor of market swings, is I feel behind us now. So a phase of slowdown of earnings growth behind us, because now we are seeing earnings growth is picking up.
Mm-hmm.
Phase of high valuations are behind us. We are now seeing very reasonable valuations across large caps, mid caps, and small caps. A lot of macro headwinds around, let's say, the US tariffs is now behind us.
Mm-hmm.
Budget is behind us.
True.
European EU deal behind us. I think similarly, the phase of FII selling hopefully will be behind us very
Mm-hmm.
soon.
Mm-hmm.
And sooner than later, basis all these positive developments combined with reasonable valuations, it makes a very solid rationale for the FIs to come back,
Mm-hmm.
right? So imagine a situation where the domestic institutions continue to participate favorably, and in due course of time, foreign institution investors also start putting net new
Right,
money.
right,
I think the liquidity will really create the re-rating of our market in the next
right.
12 months.
But Akhil, Motilal Oswal is one of the largest asset management companies in India, and you guys are positioning yourself as equity experts. Managing about more than 1,72,000 crores of lakhs of crores. My question to you is that at this point of time, when you see these markets, currency in terms of dollar term returns, our markets are not that great, and your currency is depreciating. So, what's your views on that?
So large part of the reason behind currency to depreciate was the perpetual outflow of the FIs
True,
to the extent of $3 to $4 billion per month. That
true.
created a lot of pressure on the rupee. A lot of foreign money was flowing out.
Mhm.
A part of the reason behind currency depreciation was also the fact that the US tariff deal was not going in the favor. Therefore, there was a risk that
Mhm.
the exports to US will come down,
Sure.
and therefore the inflow of dollars will kind of start to reduce. So
Mhm.
that was the second reason.
Right.
Third, of course, this huge import of gold what we have done in the
Mhm.
last 3 or 4 months, largely Indian households, that also creates pressure on rupee, right?
Right.
With relatively lower interference of RBI to protect the rupee fall, and they've just allowed the currency to have a natural flow.
Mhm.
These were some of the main reasons why the currency depreciated.
Mhm.
Now, in a single day after the US tariff deal has been announced favorably, we have seen a rupee appreciate by almost 1.5 to 2%.
Mhm.
Maybe you can appreciate by another 1%. So
Okay.
this is also now behind the window, right?
Okay.
So the phase of currency depreciation also seems to be behind us. From here, I think for the next couple of years, rupee should stabilize
Mhm.
between 89 and 91, these levels.
Right.